Welcome to Ask the Expert, an award-winning daily series from 8:30 till 9 to help small businesses. If you have any questions, ask them in the comments of the live feed. And if you need any more advice, join the official Intuit's QuickBooks SMB community group on Facebook. Accountants and business experts are on hand 24/7. During the live session, we'll be running a poll, so please do engage with it, and I'll reveal the results at the end. And make sure you've registered for the QuickBooks free annual conference, QuickBooks Connect. Look out for the link in the chat. Taking place virtually on the 9th and 10th of March, the event brings entrepreneurs, small business owners and accountants together to grow, learn and connect. Hi, I'm Lucy Johnson, the founder of Isle Bookkeep, an accountancy practice that specialises in implementing paperless systems. We take the stress out of accounting and we help business owners feel more in control of their finances. We're also a finalist in the 2021 British Business Excellence Awards, and we've been in the media several times over the last 10 months for planting hundreds of trees to protect our planet. So one thing that we can do to feel more in control of our finances is to be ahead of deadlines. So some of you may know the deadline for self-assessment was the 31st of January. So if you haven't already submitted your return for 2020 to 21 tax year, this is normally your cutoff. However, we have had an extension this year to the 28th of February 2022. So this is just 12 days if you haven't already submitted it. So now is your time to move fast if you haven't already submitted it. Hand everything over to your accountant and do everything you possibly can to submit in time for the deadline. It's important to remember that you will be receiving interest between the end of January to the end of February, but you won't be receiving any kind of penalties if you do take advantage of this. So today we're going to go over topics like what is a sole trader, what is a self-assessment tax return, is self-assessment only for sole traders? Hmrc registration, we're going to talk about drawings, we're going to talk about rebates, and then we're going to go on and discuss a few things about submitting if you haven't already, or if you're going to get ahead of the game. So what is a sole trader? So sole traders are self-employed individuals who are trading as a business, okay? But what is a self-assessment tax return? So a self-assessment tax return is a process which allows self-employed individuals from the UK to calculate their income tax from their revenue. You must register with Hmrc to qualify for self-assessment. The tax year for self-assessment is the 6th of April to the 5th of April the following year. This is the same every year. But is self-assessment only for sole traders? I get asked this all the time. So all self-employed people basically need to complete a self-assessment tax return by the deadline of the 31st of January the following year. This means it's not just for sole traders, but it's for anyone who receives self-employed income. So this includes directors receiving dividends, as these are taxed personally instead of through the limited company. It also includes people such as landlords who will receive rental income. So Hmrc registration. Hmrc registration is required. You need to register for self-assessment if you receive any personal income. So whether you're a sole trader, whether you're receiving dividends, or whether you have all kinds of taxes that haven't already been taxed as an individual, you need to complete a self-assessment tax return. When you become self-employed, you register as self-employed and you'll be given a UTR number, which is a unique taxpayer's reference. This is a 10-digit numerical code for your self-employment. Okay, so your UTR allows you to file with Hmrc. So this is really, really important for me as your accountant, as your agent, or whoever is your accountant, to be able to have access to your account, they are going to need your UTR number. So let's go on to drawings. Now, drawings is a really interesting topic. It's basically the money that's taken out of the sole trader company for their own use. So this is not to be confused with wages, okay? So see it as completely separate. As a sole trader, you can take the profits out as and when you want, and you're only going to be taxed on the profit, regardless of how much you're taking out of the business. This is not the same for limited companies. Rebates. So a rebate is basically either a partial refund or an overpayment. So it's money back to you. If you've paid too much tax during the tax year, you should get a tax rebate for the overpayment. These are really common in industries such as the construction industry, as subcontractors get taxed at either 20 or 30%, and Hmrc do not take into account that everyone basically gets that tax-free personal allowance of $12,570. Subcontractors get taxed at source, similar to PAYE, where basically the contractor takes the tax off them and pays it directly to Hmrc. Rebates can also occur if you were taxed in a job that you had under PAYE and you should not have paid the tax, or your circumstances have changed, which has meant that you've actually gone below the threshold of 12,570 at the end of the year. It can also be due to incorrect tax codes and many other circumstances. So that's really important to note. If you had a job for part of the year, they are going to tax you based on the assumption that you're going to have it for the full year. So that's really important. Moving on, when can you submit and when is the tax IO due? Well, this is pretty much what we touched on at the beginning. You can submit your self-assessment tax return at the end of the year, the 5th of April, anywhere after the 5th of April. We believe that getting ahead of the game and submitting early is the best thing you can do. We found that during the pandemic, people who had submitted their information early got preferential treatment because Hmrc could see that they're in a fair position from last year before they knew anything about the pandemic. It's also really important to remember that the tax is still due 9 months later. So if you've got a tax bill, that gives you 9 months to prepare and save for the tax. It's not when you submit it, it's when it is still due at the end of January, which is really helpful. You can really be in a good position. If you have a rebate as well, you could get that money within 7 to 14 days. I see people all the time coming to me with rebates and they're coming to me in January. But the problem is this money could have been in your account 9 months ago. So I don't know about you, but I personally would have preferred it to be in my account 9 months ago. So remember that you can submit in April, but the tax is still due in January, the next year, okay? There's no reason not to get ahead of the game. And lastly, I really, really strongly want to touch on this because it gets forgotten all the time. Do not forget about national insurance. You usually pay 2 types of national insurance if you're self-employed. You have both Class 2 and Class 4 national insurance. So Class 2 is on the profits over £6,515 or more a year. And basically you pay it at £3.05 per week. So most people would pay the standard amount. It's the same, it doesn't kind of fluctuate as your income does. With Class 4, however, if the profits are £9,569 or more a year, you will be paying 9% on your profits. And if it then goes above the £50,270, you will be paying 2% on your profits. So it's really important, don't forget about national insurance. I see a lot of people who prepare and save for tax, but they completely forget about national insurance. So do keep that in mind. So without further ado, let's head over to the Q&A and see what people are asking. Okay, so we've got Andreas on Twitter DM. Does HMRC have access to my bank account? How can they check what I'm submitting is correct? Great question, Andreas. Okay, so HMRC does not have access to your bank account. They can't see any of that. How can they check what I'm submitting is correct? They can check in a few ways. There are a few things that they can do. They do sense checks and things like that in the background. But with regards to how are they checking, basically they're not per se. They are doing, basically they're going to, you need to send accurate information in, basically. And you at any point can be investigated. So it's really, really important that you're submitting correct figures based on invoices and receipts that you have physical evidence, and it matches up with your bank account. Your accountant has thoroughly checked everything is being submitted. And if HMRC ever did investigate, then you have no problems, everything is correct. So yeah, I hope that answers your question, Andreas. Stefano on Instagram DM. I'm a director of a company, but didn't take any income from it during the self-assessment period. Do I still need to do it, basically? Yes. So you haven't taken any income. However, HMRC know that you're a director and they will expect you to take dividends just from basically what they believe. So they will have you down as he needs to submit a self-assessment tax return. So basically you do need to submit a self-assessment tax return, but it can be nil. So make sure you get that submitted. You don't want them basically sending you penalties or fines because you haven't submitted that information. So that is really, really important that you're still submitting. If you're down to do a self-assessment, you do definitely need to submit. And yeah, just make sure it's in. It would have also been really, really beneficial. There is the £3,000 tax-free dividend allowance. It's great to always take advantage of that. But also you do have your tax-free allowance as a personal allowance. So it's great to take advantage of those things. Right, let's move on. Henry on Facebook Messenger. I've actually got my self-assessment ready to submit. However, the tax bill is a lot higher than I thought it would be. Usually, we're quite good at putting money aside, but needed to dip into it to get through the end of 2021. If I'm unable to pay the full amount, what should I do? Okay, so basically at the moment, because I know this is based on this year, HMRC are basically allowing people to set up payment plans up to April, I believe it is. So give them a call, have a chat with them. They'll be more than happy to split out a payment plan up to April. If you are struggling anymore, talk to them. They're very, very good at helping you out, understanding your situation. They're not there to sting you at the end of the day. And my advice going forward as well would be to get it submitted in April, 9 months ahead of the game. And that's when you can start planning. So yeah, I hope that helps, Henry. Right, Michelle on Instagram DM. What should I do if I can't find my UTR number? Very good question. There's a few ways you can find out for a start. So first thing I would always say to my clients is to find a letter from HMRC if you have any, and basically it will be a 10-digit numerical number. At the top of your letter it will say ref and then it will be a number, so that is your UTR number, believe it or not. So it's really good if you can try and find that out. If you can't, don't worry, give HMRC a call. You can confirm basically your identity in a few ways, and they'll send out a letter with your UTR number on. So there's no problem there. Also, if you can get into your self-assessment like government gateway, it would be really good to have a look on there, because it will be on there as well. So there's a few options for you, Michelle. Right, Jenny on Twitter DM. I picked up a couple of freelance jobs in 2021 outside of my day job, but it amounts to less than £2,000. Do I need to fill out a self-assessment? So there is a threshold of £1,000. Basically, if you earn £1,000 on what Hmrc class as a hobby, then that is completely fine. You've said £2,000, so yes, you do need to fill out a self-assessment tax return. Cameron on Facebook Messenger. I need to submit a tax return, which I've never done before. I work as a delivery driver, but I haven't kept any of the receipts of my mileage, so I'm struggling to work out my mileage, council tax and utility bills. Is it true I can claim up to 20% on bills? How do I do this? Okay, so you work as a delivery driver. With regards to council tax and utility bills, it depends on whether you're using part of your property for work purposes. So if you're going home each night and you're having to sit down and plan and, you know, use an office space or use an area, then yes, you can apportion a certain percentage of your household costs. That's no problem at all. With regards to mileage, what would be preferred is if everyone had a little mileage log in their car, or alternatively an app where you can basically track your mileage and keep on top of it. If you are struggling to work out mileage, what I would do is basically have a look at your diary or your schedule, or when you normally work, and basically work how much you would probably do. You're going to have to do the best you can. At the end of the day, you're going to need to show Hmrc evidence that you feel like you can really back it up. So yeah, that's the best advice I can give you, Cameron. If you need any help though with working through those, just reach out to us and I'm sure we can help you with that. Okay, so Kira on Instagram DM. 2 years in a row, I made mistakes on my self-assessment and I'm absolutely terrified of getting in trouble. If I spot a mistake early, how can I correct it? Okay, so I think it's if you spot it within about 24 hours, maybe 48, you can basically correct it very quickly on Hmrc's, you know, on Hmrc's website where you would submit it. If it is later than that, you can basically do an amended return. So yeah, I would always say make sure that you're checking and triple checking so that there aren't mistakes before you send it. And if you are struggling and you need a little bit of help, maybe reach out to a bookkeeper or an accountant who can help you with that basically. Right, Jordan on Instagram DM. Okay, I'm on a study abroad program in the UK and have been doing some work through Fiverr and Reddit to build a portfolio. Fantastic. Should I be declaring this income to the UK since I'm doing the work here, although it's online, or in the US as I'll be going home in a few months? So yes, basically the UK stuff you should be declaring since you're doing the work here, even though it's online. Yeah, I get this quite a lot. People who are kind of working elsewhere, but it's all online. It is the rules in that country. So yeah, you basically do need to declare the income in the UK. Eve on Facebook Messenger. At the start of lockdown, I started selling candles and have now registered as a company, but I'm struggling to get my head around everything. When is too late to start with my self-assessment tax return? And is there anything else I need to do before the end of the month? I just don't want to get fined. Okay, so Eve, basically, yeah, you have until, it basically depends when you started. You said you started in lockdown. So yeah, you've got until the end of this month. So 12 days, Eve, so no pressure. Basically, I do completely understand. Where you've got a company, it's a little bit more difficult than a self-assessment. You're going to basically need to file your corporation tax return as well as your self-assessment tax return. And there is a lot to get your head around with the company. It's a lot more complicated. So yeah, that basically, in answer to your question, the latest you can do your self-assessment tax return is the end of this month, if it is between 20 to 21 tax year, which is up to the 5th of April 21. Is there anything else you need to do before the end of the month? Basically, make sure that you're on top of all of your deadlines. That's really important. So make sure you've got all of your accounts up together, and then you submit your returns based on your account. If you need any help at all, Eve, just message me. You can find me on Facebook or on Instagram. Just look for Isle Bookkeep and we can have a chat. Right, Jake on Twitter DM. Are there any common expenses that we often forget we could log? Yes, that's such a good question, Jake. I am actually going to talk a little bit about that. Basically, we talk about the 3 most commonly missed expenses on our Instagram channel. So if you have a look there, they're the most common ones. So they normally include things like travel, things like basically the home allowance and things like that. So yeah, go and check that out. And if you have any other questions, just message me and I'll be able to point you in the right direction. There's a lot of different ones for different industries. So yeah, I can normally spot what I would expect to see for your industry. Okay, so Kerry on Twitter DM, what is the difference between an accountant and a bookkeeper? Good question. So nowadays, bookkeepers can actually do quite a lot. They basically make sure that all your books and records are going into the system correctly. They're coded correctly. They pull reports. A lot of bookkeepers, if you're just doing bookkeeping, that is the kind of bookkeeping process. However, so accountants are normally more known for doing the accounts and preparing the tax returns and things like that. However, a lot of bookkeepers do as well. But yeah, with an accountant, you normally have like an accounting license, and you basically know a few more kind of tax efficiencies and things like that. So there's a lot more to it. There's a lot more complexity to it. But yeah, so hopefully that answers your question. Ellen on Facebook Messenger. Let's have a go for a second. Okay, Ellen. I'm working with 3 directors who only take a small salary, but one of them hasn't been paid yet, and it has been a while. Okay. What is the easiest way to record the salary owed but not yet paid? So I would personally just pay them and then it won't be owed. If you're needing to do it at the end of the year, I would question why they can't just be paid. If it's been a while and they're basically wanting to keep it in the business, that's fine. You can kind of just keep it as an amount based on your balance sheet. But another question I would ask is about, no, I was going to say about, no, it's nothing to do with dividends. So no, I would say to just pay it when you can pay it, and until you need to, it will just kind of sit there. So yeah, that would probably be the best advice. I'd have to look into it though, Ellen. If you need any help, reach out. Tanya on Facebook Messenger. Last month, I was introduced to an accountant by a family friend, but I'm worried he doesn't fully understand my business since I work online and my income sources aren't just regular sales. Am I overthinking it, or should I cut ties and find an accountant who really gets the industry? Okay, so that's brilliant that you've been introduced to an accountant, but you're worried that he doesn't fully understand the business. my personal opinion is ask him, talk to him, see if he understands the business. It really does depend. You do find people who don't understand it, and that's completely fine. Some people aren't as technologically advanced as others, and that's fine as well. Yeah, I completely understand that he might not understand that they're not just regular sales. But yeah, have a conversation with him, see if he really understands your business. If you don't feel like understands your business or the industry that you're in, I think that's really important. There's a lot of accountants out there at the moment that really do specialize in certain areas. So yeah, have a chat to them. You can always reach out, and you can always book in a call and basically discuss. There's no harm in getting quotes from elsewhere and having to think about it and having a discussion. It might ease your mind. They may be able to provide you something that your accountant at the moment can't provide you with. So yeah, just keep your options open and have a think. But ultimately, you need to go with what's going to work best for you and your business. So that would be my advice. I hope that helps, Tanya. Right. Bianca on Facebook Messenger. I've been self-employed for several years and have got used to doing my self-assessment. Brilliant. However, last year, I also began renting out a property. How do I include 2 income streams on my self-assessment? Basically, you can just include the income. So there's a section on your self-assessment that will state about other income, and you can basically split them and have them as 2 separate parts. So yeah, I hope that helps, Bianca. Right, we've got one more. I'm going to answer the last one. So Daria on Facebook Messenger. I'm doing my own self-assessment using QuickBooks. However, I found a couple of transactions I haven't attached receipts to. What should I do? Should I include or exclude them in my final figures? So basically, I would ask yourself why you haven't included attached receipts. Have a look into it. Have you got the receipts? If you have attached them, make sure they're there. Have them in a folder somewhere. You basically should have receipts. If you don't have receipts, I would then question, okay, is it a material amount? Was it a massive item for your business, or was it just a small amount that you know was business 100%? And also then I would look into, do you have any other evidence anywhere? So do you have it in your emails? Would you be able to draw upon it at a later date? So I hope that answers your question, Daria. Right. The poll results are in. Are we ready for this? We asked you, how confident are you completing your self-assessment? 20% of you said very. Great. 60% of you said sort of. That's understandable. And 20% answered not at all. Okay, yeah, that makes sense. A lot of people, they sort of get it, but it's just a bit of it's that concern, isn't it, in the back of your mind? Am I doing something that I shouldn't be? So yeah, if you need any help at all, just reach out. So that concludes the talk today. Thank you so much for tuning in. If you want to get in contact with me, feel free to book in a call. You can go onto my diary on www.ilebook-keep.co.uk. You can also follow our Instagram page, which is @ilebookkeep. For the latest tips on a whole range of accountancy, such as the 3 commonly overlooked business expenses. So go check it out. Anyway, coming up on Ask the Expert tomorrow is Sally Hazelwood, founder and managing director of Mumbler, the resource website making life easier for parents in local areas. Tune in to learn how to nurture a community on social media. A reminder that if you need any more advice, join the official Intuit's QuickBooks SMB community group on Facebook. Accountants and business experts are on hand 24/7. I've really enjoyed answering your questions this morning. Have a great day.